The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi folks, Basil Chapman here, Tiger Technicians Hour, and it is Friday. And I love Fridays because it's always very interesting to see how the market is going to close at 4 o'clock. Couple of things. First of all, great 2 hours. You had Steve Rhodes, and Steve Young is a musician. Steve Rhodes, and that was really a terrific hour. And then, of course, you had Tom and Daryl, another great hour. I'm going to do my best to try to match those. I've set a high precedent here. So Tiger Technicians Hour, Monday through Friday, 877-927-6648. Nothing much to do here today. All positions are in. We're just sitting tight, longs and shorts. Very interesting, fascinating, actually. And what we're looking at is a down. Well, first of all, stay tuned because at noon, you get that fabulous health show. You've got Nico and Paige. Then you've got Daryl Martin. You've got Dave White. Dave, of course, has this fabulous new program out. The art of the charts. I've got it right. Do I have it in the background? I've been using it. Actually, I went against it. I don't know if it's going to work out because, you know, if a Gartley doesn't work, it turns into a butterfly. And my work on a particular stock that we are long in my opening call, I liked it. We had a caller the other day. We have some fabulous callers. We had a caller the other day discussing it. And since the time we discussed it, it's had a very nice percentage move. I liked it. I think it has more to go. Earnings come out next week, and I'm going to see whether or not we're right because technically it really looked quite good. So that's Dave with the art of the charts. And of course, he's got his newsletter. We've got why am I blanking? Oh, of course. Then we have a break at 3 to 4. Just at the moment, we've got a break, and then we've got 4 to 6. Tom O'Brien comes back, wraps up the week, and this is a very interesting phase we're in right now. I was hoping that one of our callers who called in yesterday would call in because I had set everything up, looking at the spies, and it was 20 minutes ago I had the exact trade, yes. Here he is. We've got Craig in Toronto. Hi, Craig. How are you?
Hi, Basil. How are you doing today?
I'm well, thank you. So, I said that if you wanted to call in, we're going into a little bit more detail with the trading of something like the SPYs. Folks, the SPY, that's the S&P Depository Receipts. It's the ETF that you can trade that trades exactly like the S&P cash index. Right at this very moment when I've got 2 charts up. Oh, I didn't do that. Why do I always forget? Because there's always so much going on. Let me just go to the chart right now. Give me 1 second because I want to be able to see what you see, what everybody else can see who's not in the den. And, of course, the den, you get everything a lot bigger, and it's very interesting. Oh, I just went to the front page of TFNN. Right there it says, Basil Live Radio Broadcast. Come see the Tiger Technicians Hour live. On Thursday, May the 30th, Basil Chapman will do a live broadcast of the Tiger Technicians Hour in Newton, Mass. So I turned it into a 3-hour event from 10 o'clock in the morning till 1 o'clock in the afternoon. Parking, there's a lot of parking around there, a lot of eating places around there. And it's just it's a lovely venue. And so what I'll be doing is I'll be going the first hour, I'm going to be preparing a workshop, a whole bunch of prepared stuff, and the second hour will be the Tiger Technicians Hour live, and then the third hour will be a question and answer session different to the Tiger Technicians Hour because just the kind of response and the way we're going to go about it will be completely different. I also might show some intraday trading, just like I'm going to show Craig in a moment, the charts, but most importantly, I'm going to go right here and I'm going to click Get Tiger TV on your handheld. Click here, you've got 3 icons, and plop, there it is. And I can now see my charts that you can see. And so, Craig, this is what I'm looking at here. What we're going to discuss is that you'd like to be able to set up certain trades, and you'd like to do them so that you can put the trade on and when you go off to work, trade is done, and there'll be an exit strategy, etc. And this is what I'm looking at right now. In the SPY 10-minute chart, there were two in the ChapmanWave methodology, and I'm going to go through this in great detail on that Thursday that we meet, Wednesday the 30th, when we meet live. But what I'm going to do right now is to show in the ChapmanWave methodology, what you look for is a low bar that starts off a buy mode, and that buy mode should take you to at least 4 peaks. So what we've got in the 10-minute SPY contract from the lows of 165.35 hit twice on the 15th at 14.50 and then again at 15 at 3 o'clock. So that was very important. It started off with a stochastic in the MACD, a buy signal that went to a buy mode when peak ABC, pulled back quite sharply, then went up to D, got a down arrow because everything turned negative, came all the way back from that high of 166.36 down to a low this morning of 165.41 at 15.50. Oh, that was 15.50. 15.50? That was, oh, yesterday, of course. That was yesterday, sorry. Just above the 200-period exponential moving average. Then it gaps up this morning, and then it goes to a peak B. But that peak B at 166.36 is exactly the same as 166.36 yesterday at 11:20 in the morning, 24 hours ago. I always find this absolutely amazing. That's what's so beautiful about technical analysis. And what I suspected was we're going to get a pattern in the stochastic that says, I'm rallying above 80%, but within a few bars, I'm going to go back under 80%. If I do that with the price moving, I want to see if the MACD is going to turn down. So the trade that I was looking at for the options was this double bottom in the 10-minute S&P deposited receipts May expiration today, the May contract, and that was down at 36 cents and hit that twice. And the trade I was going to suggest is right there at the 36, 37 cent level to put it on. And if it got to, I would take off 36 cents, I would have taken off at about 42 and then at 52. And if it got higher, I would keep one little bit just to see where it's going to go for much of the day. And that one I would have a stop of about 35 cents. So what would have happened is you would have got in. It's now up at it hit a high of 73. Well, that's almost double. That is almost a 100% gain in a very short period of time. But what I was using the ChapmanWave methodology. The fact that this is an option has nothing to do with the fact that I cannot still do my ChapmanWave methodology by picking the low bar, counting the peaks, go to a D and pulling back, going to at least a D, and this one here was the perfect one when I saw that top coming in at the same time that I saw the gap bottom. I thought, wow, this is going to be a great one. Let's see where it goes to. Now, because the stochastic is a 76% in the SPY contract itself, and the fast-moving average is still positive, that says to me it was appropriate to take off as much as possible and maybe just leave something on. And that one, sometimes I think maybe it's best not to even have a stop. But you know, when something's in, I do not like on a white lightning day like this, I do not like to get the options more than 12, 14 cents. That's the way we do it. We've had some fantastic gains on those. Sometimes, if it's a stock at 150 or something, I might go to the 21, 22 cents. I prefer not to. I want everything in my favor, and I wanted to set something up this morning as a trade for my subscribers in my opening call. We often have not often, but maybe 3 times a year, maybe 4, but usually at least 3. We try for a white lightning like this. And we've had some that have gone up 250 to 1,000%, some great ones on IBM. But basically what I'm looking at here is that this would be very different. This would be for you to do almost every day that you could do it. So the trade, now let me just go through this again. The trade that I'm looking for, and I know that you look at short time frames to be able to get the entry.
Yes.
If I show you, I'm going to show this in a much larger context. the beauty of this particular methodology is that you can trade just the Ds. If you go to the low bar of the 10th of May at 162.51 at 12:10 in the morning, it went to a peak D. Well, it sort of snuck up and it went to a G as well. And then finally the G gave the technical confirmation of a down move that I would want from the MACD more than the stochastic. But everyone else after that in the 10-minute chart went to a peak D on the 13th at 12:30, pulls back, starts a brand new buy. You see the beauty of this 200-period moving average? So basically what I'm looking at, let me explain a couple of things. The maroon line, is it maroon in the chart? Well, it looks like it's a dark line. The thicker line over here that I'm pointing to right now, that is the 9-period exponential moving average. I think that's the one beauty about the DEN, is that the charts themselves show up much clearer in the right colors. And looking at it using this mobile device is absolutely fantastic technology. Just the definition just sometimes isn't there for the subtlety between, say, a red and a maroon, but that doesn't matter. Now, what I also do is sometimes you can try this. I will put another moving average underneath, and when that crosses positive, in other words, in the fast moving average of, in this case, it's that goldy color one, when that crossed underneath, that was the trade. When it crossed above, it said, be careful. Then went back to a trade. So you got one peak D, you got another peak D, you've now got a third one that goes to a D, but it also just sneaks up quickly to an E, and that was on the 15th. That was 2 days ago, 12:50, goes to 166.45. Then what does it do? Goes back to another D. So let me just explain that what we're looking at is 1, 2, 3, 4, 5. Out of 5 buy modes in the 10-minute chart from at 12:10 on the morning of the 10th of May, you've had all of them obviously went to a D. There were no aborted ones. And 2 of them went above D. They went to a G and an E. So out of one, what did I say it was? 1, 2, 3, 4, 5. Out of 5, you've got 3, almost 4, that went to D, and 1 went a little further to the G. But even the E is just nominally higher. So that's one of the techniques you might want to use, because when you get to the D, if the MACD and stochastic are starting to turn down, you can add other techniques as well. You can start to implement some kind of a put strategy. Now, that would apply to other time frames as well. But since you're talking intraday, the smaller one, I would think, I wouldn't go to the 2 and the 5 minute, because if you're playing options, to be wrong,
it can quickly go against
it's just way too quick. I think a 10 minutes allows you to breathe. It gives you a little bit of flexibility as it's formulating and it's making the move. So I just wanted to set that up and give it to you, and then when we get back, I'll ask you if you've got questions about that. So we'll be right back with Craig in Toronto. But today is Technical Friday, where I do a little bit more work on the ChapmanWave. I'll be right back. Dow's up 53, S&P's up 7.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors, such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Basil takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Let's just see what I've got here. Most importantly, I didn't... Craig, if you want to hold on just 1 second, I need to just give all the numbers because I forgot all about that for this May the 17th. Folks, we've got... the Dow up 61 at 15,295. The Comp Index is up 16 at 3481. The S&P is up 6 at 1656. You've got gold down 22 at 1364. It's going to make that M formation. I'm pretty sure about that. And we've got silver down 33 at 2232. Got copper up 250 at 3.31. And crude oil is down. We've got bonds down a point. And that is really fascinating. And the dollar is at 84.36. I'll go through these in a little while, but we've got Craig online. So, Craig, got questions?
You've laid it out pretty nicely there in the opening segment there, Basil. The 10 minutes seems to be where I need to go. I'm looking at it too close. Face right against the screen for 1 minute. Yeah,
I just I did that. In fact, there was one day I did 316 E-mini trades, just doing my waveform as it wiggled up and down and up and down and up and down. That is 316 in and out, so it's 175 or something like that, 100 and whatever. And at the end of the day, for the amount of money I made, I'm saying to myself, man, you nailed the majority of those things, but boy, that was just dumb. That was so much work. What on earth do you need that for? Yeah. I mean, it's actually, you know what it is? It's not like a marathon. It's like doing 50 or 60 sprints
Yes.
Because each one, as you know, I don't have to tell you, marathon, you get into that mindset, but in the short term, there is no mindset. You are just reacting. So you implement and then you react. Implement. So this is my recommendation. In the options, and this is what I teach in my Master Trader series, I tend to look at double bottoms. If it doesn't break to a new low, I take that as a leg A, a peak A, and I'll show you right here. The low of 0.36 at 10:10 this morning went to a peak. It went to a peak A, and then comes back and it tests 0.36. If it went to 35, that's an A minus. So that's number one. Generally, in the option in the E-minis and anything else from 10 minutes on, I hardly ever use a phantom peak. Anything less, I absolutely do. That means if they're two parallel high bars. But in options, I use a phantom peak. Why? Because they trade so differently. So if I get two high bars, I did that here for the high bars of on the 15th at 2 o'clock and then at 2:10. There was $1.14. I should have made that a gray. I call it a gray B. So that's a phantom peak. And it gets you to D. In other words, if I use a phantom peak and you get to a D, which really officially is a C, I'd rather get out early. I don't want to be waiting for D and then it goes plop.
And then it goes down,
And look at the technicals. The technicals failing, so I need to do that. So give me a call anytime you're looking at that and you want further questions, but I think we've set in place a way that at least you can start to ascribe a modicum of some kind of structure. And that to me is very important. And I would also, in trying this, take your profits very quickly, and then you'll be able to slow it down as you get better and better at it.
Yes, I was looking at possibly 20 contracts in a trade, and basically 10 cents is what I want to get out of it, and just a little bit of pocket money.
So, and if you're trading 20, then what I would do is I would get out of, I'd get out of 10 very quickly. I'd get out of the 5, and then maybe leave 5, but don't take everything back because of those 5. Those 5 still have to have a stop, and the stop is either based on the price that you want in the option, but normally I take the price from the chart pattern.
Right.
And the fulfillment of if I'm getting 100, if let's just say I'm getting 36% or whatever it is, I'll say, hey, that's really good, and I'll take something off. Sometimes it's just purely emotional. So you'll figure out how to do it. But thanks so much for calling out. Please, we were able to go through this.
Thank you.
Thank you. Have a great weekend. You too. Let's go to Robert in Chicago. Hi, Robert. How are you?
Hi, Basil. How are you?
Very well, thank you.
And so I want to look at ticker symbol WFM.
Yes, you and me both. Let's do that together. So here I am moving this. Folks, the IWM just went to leg E. Now, I just wanted to do that because it was on the chart, and it's leg D in the weekly chart, it's leg D in the monthly chart. So it's a little bit more ahead in the monthly chart than the others, which are mostly in leg C. We're going to Whole Foods Market. Whole Foods making all-time highs, as yesterday made an all-time high. It's peak D in the daily. It's, I don't know, I have to call it, I'm calling it leg A in the, I have a reason that I have no choice but to call it leg A in the weekly, but I have to tell you, we're going to go through this very carefully. We're going to be back with Robert in Chicago looking at Whole Foods Market, WFM, trading at 102.62, up 58 cents. I'll be right back.
TFNN is excited to launch our brand new software charting program, The Art of the Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, Art of the Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. Art of the Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at tfnn.com. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, everyone. Basil Chapman, Tiger Conditions Hour, and we're on right now with Robert in Chicago. We're looking at Whole Foods Market, and there was an open of 103 yesterday, 103 round number open, and a 104 round number high. So let me just put that in there. I got it in red for that one. I've got it in red, but I changed the font, and now I am all ready. And what's really important about this is that in the pattern that I like to look at. So, Robert, this is what I'm going to be doing. I wonder if you can see it on the charts that I'm showing right now. I don't know if you're looking live, but I've got a cup formation that broke out. Now, I haven't had a chance to double-check whether this was a left side, right side price time match, but it absolutely is a ChapmanWave cup and ladle breakout formation. And the breakout formation says that when you break out in this manner, you should go to at least, if you slice to the left side lip, in this case it was 96.93 back in February, it's very important to follow it until it gets to a D, and that's when you're going to have to start making decisions. Well, it made a peak D yesterday with a round number. That turns out to be a round number all-time high in the monthly chart. Here again, is this a G or a brand new A, or is it the technique that I use that's called the flat base restart, which says you can go to an A, then a B, and even a C, but you could still go to a D But at some point, not only will you come back, you'll come back to the breakout, the signal itself, which would be at 78.81. That's over 30 points away. So let me do this. I'm going to, first of all, the analysis that I've got right now says that the 120-minute chart has made a double top with 103.72 the high on the 8th at 11:30 in the morning, and a slightly higher high, which is G/C, right at 104, with the technicals quite poor, but the price has remained higher, and it's in a rectangle formation, having gapped up. And I think that was on earnings news the other day. And Whole Foods has a habit once in a while to gap up and then stay up like this. So here's my question to you. What are you looking to do?
Basil, I've held this. I haven't gone short it. It's a long-term position. I don't want to sell it, but I wonder, could you just assume that it's a peak G and analyze it like that as opposed to an A?
First of all, looking at the monthly chart, it is rare. It is, I am sorry I haven't got this all notated from way back on my black charts. I haven't notated. But it is rare in the ChapmanWave methodology to get a G in the monthly. Invariably, you'll go back and you'll say, oh, I didn't see that there was an instant restart. There was something going on that was missed. I'm going to give it the benefit of the doubt right now. I'm going to give it a G/C, which is still a very positive potential for the stock on the monthly basis, number one. Number two, I'm absolutely not going to interfere one iota. If you've had the temerity and the strategy, and I should actually say strategy, because you have been absolutely locked in on focusing on the larger term. This is the premier, world's largest organic food products. Absolutely. I have two, one just about a mile and maybe a mile and a half that way on the left, and about a mile and a quarter the other way, going towards Boston from where I live in Newton. And I compare them, and the one has had to follow the other. There was first the one, it was kind of big, but not very, very big. And then there was another one that took over. I can't remember if it was a Stop and Shop or whatever it was, down on Washington Street, and they did a great job. And now the one on Walnut Street has expanded, and I'm watching, and I follow their product lineup, and the way I can see it, they are absolutely brilliant, and the competition has been intense. Even the Shaw's Star Market has great competition to them because they also have organic foods. So it's the way that they place it. Now I'm noticing that they are putting a tremendous effort, and I'm only talking locally now, but I suspect that it's a game plan. They put a tremendous effort into the prepared foods. Now, a lot of us kind of, especially for those of us we're empty nesters with the kids out, it's easy sometimes just to pick up food, and you pick up food, and you're just done for you. And I think a lot of people, but I'm also seeing a lot of young people doing that. So my suspicion is that they are still there's a term for it when those icebreakers go through. There's a special term for it. But when the icebreakers make a pathway, and they're leading to allow other ships to come along that pathway through the ice, they are the same. That's the strategy that they've got. They want to be in the forefront of innovation. So it seems to me, in the last phase, when there was really a very big price increase, we saw that in many of the goods that were being sold, they've been able to maintain their market. I don't want to mess with your long-term position at all at this particular time. I will say on air when I'm beginning to think, I thought there was a peak F of significant proportions at 99.86 back in October the 12th. Well, it took 1, 2, 3, 4, 5, 6 months just to get down to 81. Well, that's $17. That's what big deal, 17% or something. I thought it would be a major top, but once it held, it became a very, very positive for the stock itself, because the weekly chart is actually improving as we speak. So here's my strategy. I would not think of shorting, but I will tell you this, that if at any point we do get a market sell-off that does include Whole Foods, and if it gets down into the 98 area, then the only thing I would say to you is maybe you want to lighten up a little bit. And lighten up just means you're going to take something off, first of all, to reward yourself for a great position. And I love it on our show when we have, you just heard someone talking about 10-minute charts and options to boot. And here you are. You can breathe easy because you've got this fabulous trade with a very nice profit. You've got a core position that you can hold. I love it, and I absolutely do not want to interfere with your thinking. You're the one that I should be calling to say, Robert, what should I do with my Whole Foods? Because you're the one that strategically planned it very well. So my only thing...
I saw it yesterday hit that 104 high, and
yes.
The round numbers is something that you emphasize.
I watch it real closely, yes, and a 103 open. But this is the rule. Okay, let me now give you the rule. The rule would be if there's a close above 104 and it closes above 104, maybe 2 to 3 out of 4 consecutive sessions, and that doesn't matter if it's a 5-minute chart or a daily chart or a weekly. If it closes above, what it says is the pattern to look for is a pullback with the low of the gap, in this case the gap of 99.75 to the next low of 100.10. That's the place that it should go to, and then have another attempt at a rally. Okay. If the 104 level is not taken out decisively in the next 2 sessions, and in fact it closes below 101.24, then my 120-minute chart says, okay, be careful, because there's a real good chance that it's going to try to test the 99.75 level. And that's the reason why I said only under those conditions would I say that, because there was a gap up spike to a new all-time high, which changed the notation of the weekly. You see, the last buy signal I had in the weekly was from the peak F top at 99.86 the week of the 5th of October to the low of 85.70 in November, the week of the 16th of November, and then it went peak ABCD. So once I've got a buy signal at 85.70, the moment it's taken out, I'm starting absolutely fresh. Any new high has to be considered as a fresh high. But before that, in the daily chart, before the gap up, it was way down at 92. So this spike up, I have to say, is it, you've heard me talk about that single leg A up that can fail? I don't know yet, because this is the important week that it just had, and it's made a new high this week. That to me is very important. It's saying, no, I've got strength. Therefore, I have to go to the daily chart and then the 120-minute chart to say, on a shorter-term basis, there is tremendous support going into the 120 to the 99.75 area. If that is taken out, that's the reason why I say if that's taken out, just as a little caution and a way of assessing it, I would say to you, take a little bit off, because it might fail. Yeah, that could turn into a G. I'd say it's very rare for me to get a G in my monthly charts. Hey, it can happen, and especially if there's a gap, which is an aberration, you see, to the waveform, because it spiked over the previous high. Now I have to see, how does it hold there? So I don't want to interfere with your thinking, but if you feel, let your gut tell you that it's a little bit extended and maybe you want to take something off, because that's money that you will dedicate to Whole Foods that you probably would want to put back at a certain point. That's the only thing I'm talking about. I wouldn't tell you to get out of the whole thing, because you're the guy that has held it under all these different circumstances. So I have to congratulate you, because that's really, be able to do it under all the intense pressure that they've been in, and for it to produce the results that you wanted. Congratulations. Let's look at this again. Let's give it a little time. If it does at any point close under 97, you can give me a call. We'll look at it again. But in the meantime, give me a call in about a week or two, So just to remind me to have a look at it, because it was on my watch list, but that gap up, I don't fight gaps like that remain at the highs. Congratulations, Robert. That was great. Thank you.
Okay, Basil. Thank you very much.
Thank you very much. Let's go to George in New York. Hi, George. How are you? George, you there? Oh, I remember now. George is listening on a delay. If this is the same George from New York.
Basil?
Yes. Hi, George. How are you?
Good morning. How are you today?
I'm very well, thank you.
Good. Basil, today I was looking at, just as an update, wafer.
Yes.
WFR. Mammoth.
And this is a stock you had discussed. What? Oh, man, you remember I did this in great detail. I'm very upset. I've lost my notation here. So, okay, doesn't matter. When we spoke about it, I think it was in the low fives?
Yes.
Yes, okay. Whoops. George, you there?
Yeah. Yes,
Good,
I am.
Okay. Okay, good. So, update me.
Nothing. I decided I was going to originally sell it at about $5.50. I was looking at, if I'm not mistaken. When it was coming up around there, I decided to hold it because I liked the way it was acting on the charts, on the dailies as well as the weeklies.
And this
so
is
here I am.
Let me just tell folks what we're looking at. We're looking at WFR, which is WFR is MEMC Electronic Materials, and it's trading at $6.35. Yes.
Mm-hmm.
So, talk to me.
So I'm thinking to myself now, if I'm not mistaken, I see an outside bar, and I also see this setting up as a pennant on a daily. So I'm thinking about a $7 stock still. This has more room to go up.
I agree with you, and I tell you what I did. In the charts that folks can see on Tiger TV, you will see that I've got peak A, B, C, D. I put a down arrow at E and an up arrow. So this is A, this is peak B. Theoretically, I should call it a G. I just don't see any reason to be safe, just so that in the waveform I'm just very clear about it. I'm putting a B/G. It means I cannot rule out that it is making some kind of a top, but at the same time, I love this particular pattern right now. Why? Because the MACD has deflected back higher, and the stochastic, even with the correction, is still at 87%. Now, what's very exciting is that the weekly is in a very strong leg B after a kind of a doji candle. And that says that there could be a one-to-one relationship to that, and that would target maybe $6.60. It's at $6.35 as a move up for the weekly chart. I'm going to take 1 second here. Let me just do this. That's A, B, C, D. And now we've got, what is that? D. Oops. That is, it does go to G, huh? No. I'm going to call that brand new A, B, C. Everything first. They should be a G, but because the MACD deflected, I'm going to call this one in the weekly a G/C, and I'll explain it as soon as we get back. But I want you to do a little more work because you are holding it. I don't want to be incorrect in my analysis and just be glib about it. Give me a moment. I can see already I missed out a peak.
Thank you very
That's good.
much.
I'll be right back with George in New York and Ken in Fort Madison straight after this break. The Dow is up 61, S&P's up 8, and I'll also take a little time to talk about our positions.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Learn about good health and fitness. Living a Primal Lifestyle with Nico and Paige. Next on TFNN.
Hi, folks. We are back, and we're looking at wafer. That is MEMC, Electronic Materials. I believe it's part of the semiconductor industry. So I like it very much. I did do the work on it, and I believe that this is leg D in the weekly. And it's a left side, right side price time it, and it's spliced right through. And that, of course, says you should go to a D. Well, this happens to be a D, but usually it's a D within the cup formation itself. So all I can say is that the weekly looks very strong. I would like at 77% for the stochastic to move to 80%, and that will give me a lot more comfort. I love the monthly chart, and the monthly chart had a target in the 680 to the 680, I think it was, to 719 area. So that would be my upside target. That would be my first big target, but it's in peak B. I suspect it's going to go to C the moment it goes over 647. I like it, and your support is between 586 and 567, George. And thanks so much for bringing it to our attention, and also for staples that you spoke about the other day. Congratulations. I think our listeners really appreciate your calls. I got to run because I've got callers waiting, so thanks so much for calling. Have a great weekend, George. Let's go to Ken in Fort Madison. Is Ken there?
Hello.
Hi, Ken.
Yeah. I know you're about ready to close shop. I'd like to take a look at SLW. I don't own it. I'm just looking to...
Okay, now this is what I'm looking at. This gives me a chance to do exactly what I want you to do for the wrap-up. In the wrap-up, folks, first of all, number one is I think that we are real close to some kind of a pullback, which could turn into some sectors as a pretty serious one. We actually went 200% 200% short an ETF today on a sector that I've never heard anybody actually talk about this particular short ETF. So, and it has tiny volume, so it's really more a short on the sector itself, which has been a fantastic sector. But in the meantime, looking at the gold charts, if I look at SLW, which is silver wheaten, the monthly chart has taken out the low of last month, which was 21.79. We've gone to 21.69, number one. Number two is you've got a double bottom H pattern in the weekly, and the MACD is ugly, but it's starting to improve a little bit. The stochastic is holding quite well. This is what I'm suspecting, if you don't mind. I'm going to ask that you don't do anything today. Let's look at it together tomorrow, on Monday. What I might suggest to you, I'm getting real close to the pattern that I spoke about. Let me just get to this. This is the GLD. The GLD is doing close to what I anticipated. 130.51 is the level that I don't want it to take out. It can. I would prefer that it didn't, because I wanted 28 bars without taking it out. This is 24, I think, or something like that. So in the meantime, the low today is 131.43 on the GLD. So, and the silver chart, which is silver wheaten, is a silver stock. The silver chart, the 21.86 low, we went to 21.69. So we've undercut it, we've closed above it, and today we are trading right now 21.76, a tad under it. I would prefer to wait another day. I think I'm getting a pattern that I really like. It's the arch that becomes an M formation. But I need to have proof. I would rather buy strength than weakness. The next move up in SLW, if SLW, that was SLW. If SLW can break above 23.44, it's 21.93 silver wheaten, that's when I'd be interested in a trade, only a trade. And I have to consider that the pattern's been formed, that gold is making arch formations. So hold off. Let's look at it together on Monday when I can get a feel for the overnight trading on Sunday. I think it's close to a bounce, but I'd only treat it as a bounce. That's all. So have a great weekend, Ken. Let's look at it again next week. Thanks for calling, folks. Please go to the front page of TFN and check it out. We've already got a bunch of people signing up. A free workshop here in Newton, Mass on May the 30th.